Makes 19 before 9. Time check in on money and see what's going on Wall Street this morning. It's kind of weird going on today. We flattened out a little yesterday. We got some red ink going early on this morning. Let's check out what's happening. Downtown Sebring, we'll go to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, good morning. How you doing?
Good morning, Dave. Hey, doing well today as we kind of finish up here the first week of February.
Yeah, we're actually looking at a little bit of red ink on the futures. You and I kind of putting our noses together, couldn't find a reason, just looking at profit taking after what was been a banner week by any report, right?
Absolutely. I mean, this week has been a stunning week when we look at the marketplace as a whole. And so you got to think there's some folks taking some profits today.
There's the syndrome of what goes up must go down, and you can't go straight up. Ended up 88.9 points up on the Dow yesterday. NASDAQ was up by 63. Standard & Poor's up by 11. A solidly good day, just not one of those spectacular ones like we had earlier in the week. We've recovered from the dip we took off of the scare earlier, and now we're looking at growth again. And we get to start out with a bunch of macro information. First Friday of the month, that means we're into the unemployment report. It's one of those odd ones that comes out. The unemployment rate actually went up from 3.5 to 3.6%, but we had pleasant surprises on the job creation this month, and they actually revised November and December up. The math doesn't work, but everything relatively looks like we're coming up roses, doesn't it?
Yeah, it really does, Dave. You know, that's one of those things because one of the things the unemployment number looks at is people retiring, right? So those people that are no longer really searching for jobs. And so I think that probably plays into that number. But we had a great jobs number. I mean, we were expecting like, I think 150, 160, and it came in at 225,000 new jobs. So definitely a significant beat on jobs.
Oh, yeah, and then you add on the fact that they revised both November and December's numbers up. And if I remember correctly, one of them was a pleasant surprise, the other wasn't. But we boosted those numbers up. There's nothing wrong with our unemployment situation in the country at the moment.
No, there's not. We're still definitely way over full employment. And so you wouldn't expect that number really to go any lower anyway.
Absolutely. I've been saying all along at numbers like this, 3.5 to 3.6% unemployment, you're starting to get into a more statistical wobble than anything else. Other report out of the government this morning was wages. The average work week was unchanged last month, looking like 34 and a half hours, but the average wage up by 7%, 7 cents rather, and that means the average yearly wage rate increase is up to 3.1%. It's not as fast as some folks would dream, but at the same time, it's beating the inflation rate, so there is some real wage growth going on as well.
Yeah, there is, and you're right. People would appreciate that 7% you said first instead of 7 cents. But but it is. It's good news that wages are inching up a little bit. I'm sure the main concern when we look at jobs is how many people are not at expected employment. Who's working at a job that's not their category, not their profession, and so that's probably one of the biggest disconnects we see right now.
Absolutely. The displaced workers and the like are factored into a number called the U6 unemployment rate. And while that's about 4 or 5 points higher than the 3.6% official rate is concerned, it's still among the lowest it's been in better part of 50 years, though. So, yeah, we still got a challenge, but the challenge is, at the very least, progressing in the right direction.
Absolutely. Yeah, I think we're doing well when it comes to those numbers.
We'll take that happily. I mentioned that the market kind of flattened comparatively a little bit yesterday, and it's definitely showing some flat indications today. Another reason that we'd look at the notion that it's probably just profit-taking is China released information that this is the lowest, how do they say it? There have been no new reports in the lowest number of rates of coronavirus infections now. Last 48 hours is the best it's been since the outbreak, and that indicates at the very least that the amount of quarantining and the amount of isolation they're giving is doing some good to, at the very least, limit the epidemic.
Well, and I think they did get some pushback from Wuhan and have actually started sending some folks in there to help them from the Chinese government. And so I think that's probably given some relief there. But on the other side of the pond, us over here, You know, I saw this morning the headline, we have a ship coming into New Jersey that has Chinese nationals on it that are infected, including some U.S. citizens now. So it's not over. I mean, maybe it's slowing down a little bit in China, but now we have to be concerned about worldwide.
Now the risk of pandemic begins if they can control it in China. That's a good thing. The YouTube videos that have been smuggled out of there, just absolutely frightening looking at the piles of body bags. But we now look at it possibly getting onto our shore. It puts us in another one of those truly awkward immigration questions. What are you going to do with a boatload of infected foreign aliens coming on board, right?
Well, yeah, and then what do we do with people coming back into our country that are citizens here? You know, so that's the other issue.
Absolutely. Earnings season continues, and I gather we got a boatload of names folks recognize that have told us about the last quarter, huh?
We do have some stuff coming in. We got Hanes Brands coming in. They basically came in as expected at 51 cents a share. Their revenue was lower than expected, and I'm sorry, revenue was above what was estimated. However, their guidance for the coming year is a little less than what everybody had expected. So based on the forward guidance, they're trading down a little over 3.5% this morning.
Oh, shucks. You know you're in trouble when somebody has trouble selling underwear.
Yeah, but that's not all they have, Dave. They do have a little bit of activewear and some other stuff that's more fashionable than those.
No, okay, fine. I'm still wincing over $12 for a 3-pack of skivvies. I'm sorry.
Oh, you can find them for 12? So, hey, on the other front, we've got Spirit Aero Systems. Now, not Spirit Airlines, but Spirit Aero Systems. They're part of the aerospace component supplier. They supply stuff to Boeing. They didn't report their earnings yet, but they did come out and reduce their dividend from 12 cents to 1 cent a share. So a significant turn in their dividend payout rate is being caused by, again, the disruption in the Boeing 737 MAX continues to raise its ugly head and show itself in different areas. And this is an area that we have not really seen until now. They are trading down about 3% this morning.
You got to figure that the ancillary supplier chain was going to get hit eventually by that debacle, didn't you?
Absolutely. Now, we do have some green ink. Sometimes you wouldn't think so, but Uber Technologies. It's one of those cases where you lose money, but you're still up in the green section when it comes to the close today. So they didn't lose 4 cents that they were expected to lose. So they lost 64 cents a share. They were expected to lose like 68 cents a share. So that was a good thing, right? And they're on target. They've cut their expenses, and their original projection was to be positive, have profit by the end of 2021. Now they have moved that target to the fourth quarter of this year. They expect to be profitable by the end of this year. So that's some good news from Uber. And I don't know if you have them on your big winners list or not, but they're up a little over 6.75%.
I was going to say, not taking as big a bath as you'd expected and say you were going to get out of the bath eventually would be enough to make a stock go up nicely, wouldn't it?
Yeah, it would. We got T-Mobile, one of the cellular companies. They beat by 4 cents a share. Their revenue came in above estimates. They added more monthly phone subscribers, which is always a good thing when it comes to the cellular business. They're up a tad, about getting close to 1% now. And they're bumping up against their 52-week high. Now, the last one I have for you should be on your very biggest winner list.
Okay.
Pinterest had an amazing quarter. They came in at 12 cents above. 12 cents is what they came in as. 4 cents above estimates. Doesn't sound like much, but they had better than expected revenue, better profits, They beat the street across the board. They're looking at, they gave an upbeat report for 2020 as far as average revenue per user increasing. And so they are up almost 19% this morning.
That is a big up. I'll bet they put a picture of their quarterly report up on their account on Pinterest. What do you think?
Maybe they did. I didn't go there to look.
Once again, resetting the table. It was a modestly up day yesterday on Wall Street. One of those weeks we couldn't complain about in the least if it were normal, but it looked like it was flattening out a little bit from the recovery we were experiencing. Looks to me like we're going to continue that flattening and maybe even take some profits, Phillip. Where are we going 45 minutes early?
Yeah, we are. Right now, we're looking at the Dow dropping a little over 1/3%, down $111. We got the S&P 500 in the same percentage rate, down almost $12, and then we got the NASDAQ down almost $44 this morning. So you're right. Everything is heading green today. Red today as we get ready to start. As we look at the commodity side, the silver, gold, those things, gold just went positive by less than 0.1%, and we've got silver down 0.75%, and then crude oil. That's the lowest we've seen it for a while. It's down 1.3% this morning from yesterday's close to $50.27 a barrel.
That's the direction we want to see it go for the sake of our pocketbooks. Overseas markets, by and large, everybody was in red ink. Asian markets were off, but not precipitously at the close. European markets are trading downward considerably today, probably catching a case of the flu looking at our futures so far. Phillip, somebody needs insulation to make sure our retirement account stays retirement capable. That's what you do. Tell me how to find you on the phone.
Hey, folks, if you are in that danger zone, what is that? That's 10 years before retirement, 10 years after retirement. It is important that you know how much risk you have in your portfolio. That's why we've put together our financial x-ray. Give us a call at 863-382-0037 to schedule your no obligation financial x-ray. Catch us online at statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And every weekend, or every weekday, right here on Light FM. Phillip, thank you. You have a dynamite weekend, and we'll catch you Monday. Fair enough?
All right. Sounds good, Dave. Thanks, buddy. You have a great weekend, too.
Thanks a million. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you have a great weekend. Look forward to speaking to you again on Monday. Remember, if you don't know what your risk number is, call us right now at 863-382-0037 to schedule your financial x-ray. Until Monday, have a great weekend.